What's going on, everybody? This is Travis Witherspoon from Carter Cow Capital. This is another Sunday episode of Trade with Travis, another game plan episode. If you have been with us before, essentially today on Sunday when the market actually opens, there's really not a lot of movement that ends up happening, especially at the beginning of the morning or the beginning of the afternoon. So this gives us a chance to be able to take a look at the market when it's kind of stagnant, be able to find opportunities, be able to get into them, see if we can be able to exploit some of those trades. So without that being said, let's go ahead and get into it. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that forex trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as we go through and take a look at these charts, because I'm pretty sure there's probably not going to be a lot of people that's going to end up watching me live, because this is probably one of those off times that I basically end up posting this up. But even with that being said, what I end up taking a look at is trending markets only. I like being able to find trades that are in R2 or R3 rankings. If you've been a part of our videos, then you understand exactly what I'm looking for when it comes down to that movement. The next thing that I end up looking for when it comes down to finding direction is time frame alignment. Then after that, once we end up having that direction and understanding what is actually happening, if we do have time frame alignment, then after that, we look for overbought and oversold zones with the stochastic to make sure that they're matching up with the same direction. The last thing that I end up looking for is a catalyst. A catalyst is broken down into a counter trend line break and economic news. And then after that, always we try to find some equity management. Or we always got to make sure that our equity management is right, which means that we got to make sure that we have a very good risk versus reward. Me personally, I like being able to trade with a risk versus reward where you're risking 1% to be able to make 2.3%. Essentially risking $100 to be able to make $230. That's just the way that I end up doing it. It makes it a little bit easier when it comes down to me. Obviously, I like being able to have bigger wins and cut my losses short. Okay, so with that being said, let's go ahead and take a look at what's happening with the economic calendar to be able to get an example. And then obviously, we're going to end up talking about if you're interested in being able to learn a little bit more information, if I provided value for you, all you have to do is go to cartercowcapital.com/start here. Be able to sign up for one of our free webinars. We're actually going to end up having a live event on my Facebook page a little bit later on today. I'm going to end up sending that link. Hopefully, it can be able to assist y'all for being able to get in. If you're not able to get in based off of that link, what I end up doing is I'll send that link in the video again once I end up starting that service, which will end up being about an hour and 30 minutes. So once again, let's take a look at what happened or take a look at what's happening this week. Now, remember, we are in the third week of the market. What's going on, Casey? We are in the third week of the market, which means that the first week of the market is always a big mover. We're talking about a lot of economic news that ends up happening. Typically, the second week is more of a trader's week in which we end up getting a lot of traders movement, meaning that the chart was more important than what you end up seeing with the economic news. The third week is typically a mixture of both. You're going to end up getting some high impact news that's going to end up coming up. If I'm looking at it on Wednesday, we see retail sales and FOMC meeting minutes and everything else like that. You're going to see that a lot. And then after that, that allows us to be able to know that we're going to be able to trade a little bit. And then after that, we're going to have to focus in on some of the fundamentals that are coming out that may end up affecting our overall market movement. Okay, so there we go. Taking a look at Mondays, taking a look at Tuesdays, the Trader's Days. Monday is a Trader's Day. Tuesday is a Trader's Day. Wednesday, we'll end up having our first fundamentals day, where we end up seeing news from the United States dollar, the New Zealand dollar, and see what's happening with the Australian dollar. And then after that, Thursday, we have another fundamentals day. And then on Friday, we end up ending off the week with a Trader's Day as we go through and take a look at that. Let's go ahead and get into the big three real quick. In taking a look at the big three, that is based off the United States dollar index. Let's take a look at gold. Let's take a look at oil. You end up taking a look at those pairs that gives you a greater example or a good identifier about what's going to end up happening in the market overall. So from a weekly standpoint, we take a look at what's been happening with the United States dollar index. We end up talking about this market. I end up expecting that the market was going to end up falling at the beginning of the week, but I also end up saying that if the market ended up breaking a counter trend line break, it was going to end up trying to push up towards this red area, and if it kept on moving, then we had to treat the market as being bullish, and that's exactly what ended up happening. The market broke the counter trend line break. Once it broke this inner trend line, once it broke this inner trend line right here, and then after that, outer trend line. Then once it ended up breaking, it started to push back up. Now, this market will be truly bullish once it ends up breaking past the overall high of this movement right there, which would be at 12,865. If the market continues to push up bullish when it comes down to that movement, then what we have to do is focus in on daily fibs. Our daily fibs are basically telling us that this market has fell down to the 236, but it has not pushed up. But it has not had a strong, basically reversal when it comes down to overall movements. Typically, a healthy market means that the market will fall down to at least a 382. The market has not happened when it came down to that. So I expect the 80-20 rule to be able to happen, which means that we'll probably end up seeing a little bit of hesitation of this market trying to be able to break the 12,945 area before ultimately being able to make a move. Now, if it keeps on moving strong, then we're going to end up seeing that the market may end up going to 13,170 for the overall D extension and being able to go from there. Type in a wire, yes, if that makes sense. But the weekly and the daily are basically saying the same thing. The market is bullish. The only problem is that if you look at what's happening with the stochastic is a little bit overbought. So I'm not going to be interested in being able to make a move when it comes down to that. I want to see if this market's going to end up making a double top and see if it's going to end up crashing, or let's see if it's going to end up breaking. I'm going to end up being patient enough to be able to wait and see how this market's going to move before doing anything when it comes down to United States based pairs. Take a look at oil. Take a look at oil. Same deal. Weekly and the daily are basically showing strong bullish movement when it comes down to that. Now, remember, we are in the summer months, and typically oil gets a little bit higher because there's more demand when it comes down to being able to use it because of travel and anything else that has to do with oil as a whole when it comes down to the summertime. But mainly it's because of travel, because there's more people, looking to be able to get it. Obviously, it's going to end up being a higher price when it comes down to what's happening with oil. Now, from a weekly perspective, the market is expected to go to 171. Currently, the market has broken out of consolidation for the weekly, so the market is in a R2 position and is strictly pushing bullish. We take a look at it from a daily perspective. We talked about this a couple times last week and the week before. We said that there were three areas where you could have got in for us being able to make this movement. The first one was the triangle where it ended up breaking to the upside. If you end up getting into that, then you should be able to see this market kind of push. What's going on, Sean? Hope everything's going well. What's going on, competitive true? What's your idea on pound yen? I will take a look at that as well. I actually have that chart pushed up already. We'll take a look at that one as well. We're seeing that the market is basically pushing up. Currently, right now, it's past the 127, which was at 120. Currently, the market's at 120.23. There's a D extension that's expected to be able to get hit at 126.65. 126.25. Currently, because it is in the push zone, I do expect for the market to keep on pushing up towards that area before actually being able to have a huge fall. So if you are interested in being able to get into this market, I know the market's a little bit overbought. So that means that any trade that you end up doing from this point moving forward will have to be nothing more than scalps. And you can be able to test the market on a counter trend line break to the upside. Then there you go for us being able to move. I've already done make my money off of this market. I'm not interested in being able to jump in right now off of this one, but we'll see how this market kind of reacts going into this week. If this market breaks a counter trend line break in the 2-hour buy zone and gives us a retrace or a retest of that move, then I may end up looking at it from there. Okay, so there we go. Let's take a look at gold. Let's see what's happening with gold before we move on. I'll take a look at pound yen right after that. Then after that, we'll get into the indices and be able to go from there. Currently, right now with the pound, not pound. Currently, right now, what's happening with gold? We can clearly see that this market is breaking a counter trend line break to the upside. Give me 1 second. Casey, I'll take a look at your pound United States dollar trade at the pound yen. Um, so if we take a look at what's happening based off of this, we can see that this market has broken or is about to be able to break this outer trend line break to the upside, which means that gold is going to end up being truly bullish. Now, if gold is going to end up being bullish in this area, this is one of those areas where I think that the market is going to truly have a pretty good movement to the upside. I will pay attention to this one overall. Obviously, you know that I've been in on gold since 1850. my overall expectation is that I think the gold is going to end up going up to 21.64. That's what technicals are basically telling me. That means that overall, I think that gold is going to end up pushing up, and I believe that the United States dollar is going to end up falling down. But United States dollar ended up having a strong move last week for its overall movement. So retail sale numbers are going to end up being very important. What we're going to end up seeing on Wednesday. Um, from this upside move, we take a look at this, it has pushed up to the resistance of this consolidation. Because this market is at the resistance of this consolidation, the question is it going to end up breaking out, or is it going to end up falling back down to the downside? We can be able to pay attention to that based off of the 2 hour candlesticks. Currently, right now, it is at resistance. And because it is at resistance with this big, large move, I do expect that the market may end up having a little bit of a drop off. We can see that obviously it's 5 o'clock right now. I mean 5:40 right now. So in 20 minutes, you may end up seeing the market may end up having a little bit of a drop off before pushing up. Um, but if it remains to be above this overall area, then I think that the market will remain to be bullish. Just like how we end up taking a look at what happened with oil, I would take a look at a 2 hour, counter trend line break in the buy zone, see if the market's going to end up breaking. If it breaks past this purple line right here, then the market's truly going to end up being bullish, with the D extension being at 1887. So that is my take profit one from that position. I've just been patient. I know that this market's going to take a little bit of time to be able to push up to the upside. So I'm just going to wait when it comes down to that. For people that are looking at being able to add on, you can add on in two different positions. One, you can add on if this market breaks above this high and keeps on going, or you can wait until the market truly has a breakout and a retest from this position before going back in. Okay, here we go. Let's kind of take a look at pound yen, and then after that, we'll take a look at pound United States dollar. Type in a while if that makes sense. If you have any questions about that pair, if you don't have any questions, then once again, this type in a while, yes, if that makes sense when it comes down to those big three pairs. So, pound yen. First off, Casey, you should have hit take profit. I know you were looking at pound yen a long time ago, so you probably already hit take profit on this one. So I think that's the reason why you're not looking at it when it comes down to this. But currently, what is happening is this: from a weekly perspective. This market was in consolidation. Remember, the rule is when a market breaks out of consolidation, you will end up seeing a retest. Once it ends up having a retest, if it passes, then it's going to keep on moving to the upside. Now we can see the stochastic being in the buy zone or being very close to the buy zone, and we end up having a strong counter trend line break in which the market has been above this overall counter trend line break for the last 3 weeks. That is a very good thing to be able to know, because if we're looking at this overall position, it fell down to the 618, which means that it's expected that it's going to end up moving to 180.75. So I am bullish when it comes down to pound yen for its overall movement. Now we take a look at the daily. The daily is overbought, and we see that it is in the sell zone. Now, if you've been around me, if you basically end up looking at any of my trades or anything that I've talked about when it comes down to the stochastic, especially when the market is trending, it takes 7 to 11 days of overall movement before being able to make a U-turn. So what I'm expecting to be able to happen is to be able to see that this market may end up kind of going back to this overall area right here, somewhere around here, where we end up having all these wicks, and see if we can be able to get a little bit of a push back up to the upside. Now, this is I would say evening star, but it's not really an evening star. But we have a strong reversal at this particular point. The only thing that I would pay attention to is, as long as this market does not break this overall U-turn area right here, then I think that the market will be good for being able to push up to the upside. Now, if anybody's looking at this, answer this question: what is the market building right now? What are you seeing right now at this particular point? So I'm going to need some help from y'all. What do y'all notice right here? See if anybody can help me out on that. There we go. Double top. I'm seeing a double top as well. So from that standpoint, obviously, At this particular point, I'm not necessarily interested in being able to make a sale or a buy because I know that I want to buy. That means that I'm just going to wait for a low price, right? And being able to pay attention to that. We can go into the 2 hour and we can use that little area where I had this circle right here as side A on the 2 hour to be able to see where this market is going to end up coming back to so we can be able to get in on it. But we're probably going to have to wait 7 to 11 days, or in this case, we got one, two, three, probably going to have to wait another 4 more days 4 to 5 more days before this market truly starts to slow down momentum at this point before being able to make a upside move. I would not get into it if it breaks this low, but as long as this market stays above this overall area, right around the 160 area, then I'll be interested in being able to get in to be able to ride it back up to 180, or in this case, 175, which is the daily, 180, which is the weekly. For what's that overall movement. So I'm going to stop right here because there's nothing else to be able to do. If you are in the trade and you are buying, I will look at being able to take profit. If you are in the trade and you're looking at being able to scout the market to the downside, I think the only scalping opportunity would be sales. But me personally, I'm only looking at buying based off of what I see with the weekly and the daily. So there you go. Casey, let's take a look at pound United States dollar. Type in a wire. Yes, if that made sense for us, that pair. We'll come back. We'll come back and take a look at that one if you have any questions on that movement. Let's see, pound United States dollar, I'm going to do over again. So I'm going to clear the screen and I'm going to start over from the beginning. Let's go to the weekly. Now, most of y'all notice that I end up doing most of my forex trading through Smart Trader. Now, the only reason why I do it through Smart Trader, I love Trading View. I think Trading View does a very good job when it comes down to indices and everything else, is because of one feature. If you take a look at the smart tools when it comes down to Smart Trader, they have this thing called a smart fib. What happens is that if you go to the fractal high when it comes down to a movement, you can go to the fractal high, place your mouse just directly over the top, and then left click. And what will end up happening is that it will end up showing you the actual fibs for the actual movement and what's happening in the market. Now, you notice this market that's went to 1, 2, 3, 4, and currently right now it's on the fifth wave of this overall movement to the downside. We can clearly see that the market is bearish, and if we're looking at it from a weekly standpoint, this market, based off of how it's showing, could particularly go all the way down to parity when it comes down to the pound United States dollar. Let's see. Pound United States entry at 122.97, stop loss 74, price target 121. Okay, so he's bearish. Obviously, it makes a lot of sense. Um, so we take a look at this. Here goes your A, here goes your B. The market, here goes your C. The extension is expected to be able to go down towards that position. Currently, right now, the market's at 123. If it goes all the way down to if it goes all the way down to parity, then you're talking about 2,300 points. 2,300 points, pips of overall movement. That is absolutely insane. And I think that's the reason why we're seeing a lot of consolidation, because this market has not been in parity for a while. Quite frankly, I don't think it's ever been in parity when it comes down to the pound. So I am going to end up paying attention to what's happening inside of this area. Typically, when the market's in consolidation, I typically don't make a lot of moves when it comes down to consolidated trades, only because I just don't like trading consolidation. That's just one of my things. I like trading the market when it's trending. But currently, right now, we're in the middle of this consolidation area where the support naturally is at 120, and the support is at 120. The resistance is at I got 142, so I'm just going to say 142 for its overall numbers. And this is 120. So we have a large point of overall movement toward the downside that we're looking at currently. I'm going to talk when it comes down to what Casey is looking at for this movement. Currently, right now, here goes your sub fibs. So you take a look at your sub fibs. Your sub fibs, when it comes down to, if this market was to break out of the consolidation, it's going to end up going to 118.25 before being able to retest and start being able to make its move. So currently, what I think is going to end up happening, if this market remains to be like this, there goes your A, there goes your B, here goes your C. It will hit the D extension. It will retest up to 120. Once it retests up to 120, if it does remain to be bearish, then after that, we're going to end up having a strong free fall all the way down to parity if that was to happen. Now, looking at over the course of the last since 2016, this market has been in this consolidation area. So I do not expect that unless something just absolutely changes and the United States dollar just gets absolutely strong. I don't expect that this market is going to end up breaking below that level. So the take profit level of 121, 121.63 makes sense because um, that is the 127. And if we go based off of this market is only retraced up to the 23.6, which means that, once again, Casey, that is an 80-20 rule. And typically, when you look at 80-20 rules, they have a little bit of hesitation right around the 127. So we may end up seeing a double bottom right here at this particular point before actually being able to move to the upside. So there goes your first bottom, goes back up. It probably may end up doing something like that before pushing back up. So I think that you're in a very good position to be able to capitalize on that movement from there. Currently, right now, people that are looking at being able to sell on this position, what I will end up saying is pay attention to what's happening with the 2 hour, pay attention to what's happening with the 15 minute. If you're trying to scalp, my scalping positions will end up being down basically to the 127 area, which is right around that price target that Casey ended up saying, which was that 121.16. Um, but currently, right now, because the market is in the buy zone, there's really nothing to be able to do. I would have to wait for a high price to be able to get in before actually being able to make that movement to the downside. Me personally, I'm not in, and I'm going to stay away. Euro, United States dollar. Let's take a look at that one. Type in a Y, yes, if that makes sense for everybody that has been watching this. When it comes down to that pair, we'll go ahead and get off of that if that makes sense. Euro, United States dollar. Casey, right. Entry at 105.50, stop loss 101 with a price target 103.31. Okay, cool. Let's go ahead and take a look at that. Hold on, I have this on my chart. I know I have this one. I don't. All right, cool. I'll start over again. All right, so taking a look at what's happening with Euro United States dollar from a weekly standpoint. Same deal. A was broken. Casey, we went through pound United States. You're trying to sell it. Um, Basically, I seen that double top. So yeah, it'll probably be the same. It'll probably be the same, Casey. Me personally, I don't. After the move has been made off of that one, I typically just move on. I try to find high percentage trades. Um, I don't want to trade against the direction of high probability. Just me personally. All right, so currently, right now, we take a look at the weekly. If the market continues to be able to fall, this market could go down to 93. Once again, I kind of find that I kind of find that hard to actually think that that's going to end up happening. Obviously, we see this market kind of bounce off the support levels from the weekly. If we take a look at this, the natural support was um, I have 103. I'm going to cut this just a little bit. Resistance, I have 124. That's the overall area to be able to take a look at. So, with that being said, let's take a look at okay, because we're at support when it comes down to consolidation, and the market is basically in a no trade zone. Currently, right now, if you have not gotten into this trade, I would not necessarily be itching to jump in on this trade, at least not yet. A couple of reasons why. One, because if we're looking at this is the expectation of the market basically going back bullish, and we have not hit support yet. Again, I would rather catch the market at support if we're going to end up seeing consolidation. You take a look at it from a daily perspective. The daily, when it comes down to the stochastic, is in a no trade zone as well. But we're going based off of what? We're going based off of this. Um, so it goes your fractal hop. Let's see. go based off of this. Okay, that A was broken. Let's take a look at it again. Here goes your new fractal high. Okay, currently right now it's done 7 different waves at this particular point. There's a D extension that is suspected to be hit. Now, here's the one thing that I do like about this trade more than what I've seen with pound United States dollar. This market is below the B. And because it is below the B, then that means that it's in an R3 trade. Because it's in an R3 trade with a counter trend line break and the D extension is suspected to be at support, this makes it very easy to be able to see that other people are going to end up getting into this trade and looking at being able to sell as well. Now, that sale may be scalping or anything else, but there's still almost about 180 pips left before it ends up hitting the D extension. So I would be more excited about this trade than I would be any other trade at this particular point based off of what I'm looking at right now. Now, the stochastic is still in the no trade zone. It's a little bit oversold. But if I'm banking on out of all of the pairs that I looked at for as Forex pairs right now, to be able to figure out which one is going to end up giving you the better chance of being able to win, it probably would be Euro United States dollar, just based off of that one little context clue. Now, with that being said, let's take a look at what's happening with the 2 hour, and then after that, I can be able to give you a little bit more information. But overall, here's the A, there goes your B, here goes your C. The extension is expected to be down there. That's your C. That's where the 2 hour needs to go. Take a look at the 2 hour. There goes your 2 hour fibs. A was broken on that one, so we'll go back up and take a look at this fractal high right here. This market has completed a D extension on the 2 hour, which means that it's expected that it's going to end up popping up to the upside first before going to the downside. Now, I can clearly see that this market is kind of curving over. I think this is based off of what ended up happening. What ended up happening on Friday, where the market ended up having a strong move to the downside on most pairs. We can see that this triangle has been broken to the downside based off of this little bit of a gap. So if the market remains to be below here, it may end up putting you into a position to where you have to make a decision on if you're going to be able to get in at this spot. And just saying that you may have to lower your overall risk percentage to be able to get in, if you're going to stay in at this movement. But here is the triangle or the wedge that I was basically showing. Currently, right now, it is below that wedge, but I will wait a little bit more. We'll wait a little bit more time for some confirmation. But obviously, the odds-on favorite is that the market is going to push down to the downside, and because it is going to end up pushing down to the downside, if you're not in, if you do expect to be able to trade this one, I would end up saying, wait for this market to truly give you a breakout, look for the retest, and then after that, look for the market to be able to fall. I will wait on a 15-minute buy zone type of or sell zone type of situation if that is to happen. I will place my stop loss just above the overall. I place my stop loss just above the overall high of this area, which was right around 105.36. You want to be truly conservative. You'll place it above this little candlestick, 105.65, and then after that, look to be able to take profit right at the support line, which would end up being at the 2 hour D extension. Daily D extension, which is 103.11. Okay, so that would be my game plan if I was to be able to trade it. Casey, I think you're in a good position. 103.19, I think is a very probable spot that this market could potentially go to. The only thing is making sure that your stop loss is above, is safely above, so you don't have to worry about being able to get taken out. Hypothetically, what you could do also is place your stop loss just above this high, but no, you couldn't do that because that makes it a 1-to-1. If you place it above the yesterday's candlestick, which will be at 106.46, and go after a target of 103, it'd be a little bit more than a one. It's not a 1-to-2, but it'd be higher, like a 1 to 1.5. Probably not the best trade out there if you're looking at it when it comes down to that. But I do think that it will hit. Okay, I do think that it will hit, Casey. Typing a while, yes, if that makes sense. Once again, take a look at the triangle. You may end up getting some movement based off of that triangle. If the market remains to be low from here, then I would pay attention to that movement. But currently, right now, I wouldn't jump into anything, at least not yet, until it proves that it's going to end up being bearish. We're getting close to the 6 o'clock movement, so we may end up seeing a little bit of a pop up or anything else before this market actually moves from there. US 30, let's take a look at it real quick. We'll take a look at NAS 100 and everything else. If you end up getting into some of the US 30 trades or the NAS 100 trades, then quite frankly, you end up making a killing based off of that movement last week, especially on Friday. For the people that end up doing that, congratulations to you. End up having one of my better days on Friday when it came down to that movement. Now I have a lot of stuff here, so bear with me when it comes down to this. All right, so from a weekly perspective, I'm gonna hide. I'm gonna try to see if I can hide a lot of this stuff. All right, from a weekly perspective, this market went from breaking the point of control and being able to push to the downside, and they end up hitting the D extension at 30,945. From there, the market ended up retracing, and then after that, breaking down and ended up making a movement to the downside from here. Now, answer this question for the people that have been with me for a while. If I remove this drawings and I remove these indicators, what candlestick formation do you see right here? We talked about this on Wednesday, but what candlestick formation do you see right there? Anybody help me out with that one? What candlestick formation do you see with that one? Okay, you said swing high, I'm not a part of your group. Okay. Um, so the candlestick formation that I'm looking at right here is a evening star. Now, obviously, we had a couple things that ended up happening. One, this market ended up pushing to the downside. We had strong bearish movement. And then after that, we had this engulfing candlestick right here with that green candlestick that ended up pushing up to the high. It covered up 3 weeks of overall movement last week. And then after that, started to be able to U-turn towards that area. Okay, started to be able to U-turn, and now it ended up making an evening star right here towards that area. Okay, so what does that mean? That means that we're seeing continuation to the downside. Now, typically, when you end up seeing a evening star, when you end up seeing a evening star candlestick, what you end up seeing the next week after that is that the market will end up basically retesting this overall candlestick formation before ultimately being able to fall down. Now, what I'm looking at right here, and the reason why I'm trying to zoom out and get as much information as I possibly can is because of this. We're leaving from a high value node to a low value node area. We're basically at the last portion of a low value node right here. And then after that, we have this pocket right in here that we have very little trading or very little trading activity inside of that area. Why is this significant? The reason why it's significant is because anytime that you end up going from a high volume node all the way down to a low volume node, typically what you end up seeing is that the market will end up flashing to the downside faster than usual. It's the same thing that ended up happening when the market ended up breaking the the high volume node from here, and then pushing up to the overall highs right there, where the market basically ended up starting to do a lot of consolidation. This means to me that if this market does decide to fall, it's going to fall, and it's going to fall fast. That means that you have a lot of opportunities to be able to get into this market and look at being able to sell all the way down to the 26,500 area if the market continues to fall at the rate that it's going to end up doing. So that means to me that this market is bullish, and if it is bullish, you're going to end up having a lot of strong weeks of overall bearish movement. One, because of inflation. We see now inflation has been as high as it basically has been in the last 40 years, based off of the numbers that we ended up getting last week, which means to me that, I mean, if you're selling, keep on looking at being able to sell and keep on being able to take advantage of this low node area that we have inside of this area right there. Um, Sean, we'll try to need to be a part of your group. Hey, all you have to do is just do this. Go to cartercalcapital.com /start here. Go ahead and sign up for one of our free webinars. It's stuff that we end up talking about a lot inside of that group for being able to place in. There it is. It showed up inside of the text box. If you want to be, anybody else wants to be a part of the group, all you have to do is just be able to tap in with me, being able to go from there. Um, but okay, so that's what we know. We take a look at it from a daily perspective. Not even going to end up pulling out any other thing. I don't need to look at any other. Don't need to look at any other thing when it comes down to the charts or indicators or anything else like that, because this one is pretty simple. This market is going to keep on falling down. We know that it's going to keep on falling down. We see the low nodes of where this market is going to end up falling to. We have a counter trend line break that has already done happen. So that means to me, what I will look at is any type of 2-hour counter trend line breaks that you can be able to get as this market basically starts to make a little bit of a retracement. There will be a retracement. It will be ever so slight. If I had the bank and kind of guess what a retracement is going to end up being, going based off of volume profile once again, I would bank that it will probably end up going up toward the 3,200 area, which would be basically the bottom portion of this high volume node. And then after that, look at being able to flush down. Okay, so if it does push up, that will be the area where I think that it would go to. Um, we have a point of control at 31,998. Okay, so 32,000. If it does push up going into next week, based off of good news, based off of anything else that may end up happening, if the market is going to truly be bearish based off of all the information that we have, it'll probably end up going down to 32. It will probably go to 32,000, and then after that, retrace. If you can catch it at that area, then I would try to squeeze the life out of this chart and try to get as much as I possibly can. That would be my thought process. Well, that is my thought process for us being able to do that. Now let's plug in some stuff and be able to take a look at it. So take a look at what's happening with the stochastic, and let's see where we're at when it comes down to this. So we have that as an idea. We know that obviously if we're looking at the extension of this move, it's expected to be able to go to 27,663. We do have a counter trend line break. We already talked about that. The daily is in the buy zone, which means that we probably might end up seeing a little bit of a reversal, and we can see that the 2-hour is basically in the buy zone, but a gap down. So what I would be expecting is that I will probably look to see if this market may take a little bit of an upside move overnight. If you can be able to catch it right around 32, then after that, once again, I will look at being able to sell it to the downside from there. Currently, right now, there's nothing to be able to do, but that is the game plan that I'm looking at being able to do from there. Same game plan that I've had with this pair for the last few weeks. Okay, typing a while, yes, that makes sense when it comes down to US 30. Go ahead and go through NAS 100. I'm going to get through this quickly because I am running a little bit over. Let's see. Let's see. DAX doesn't open up until 7. Okay, so NAS 100. From a weekly perspective, it's doing the same thing. We are falling into another low pocket area, and typically remember when you look at what happens with US 30, typically US 30 and NAS typically move in the same direction. But going based off of what I ended up talking about before, kind of like what I ended up saying last week, NAS has not hit a D extension yet. And because it has not hit a D extension yet, which is at 10,760, there will probably be a little bit more of a push to the downside when it comes down to NAS compared to what it would be with US 30. So if I had to pay attention to a chart more, I would pay attention to NAS than I would US 30, even though US 30, when it moves, is going to end up having a strong movement to the downside. Now, From a weekly perspective, the market's in an R3 position, which means that we're going to end up seeing one-sided trading. Um, if we end up taking a look at where the market actually is from a daily perspective, we see that same evening star candlestick. I'm going to remove the drawing, so I'm going to show it again. We had the same evening star candlestick formation. The market has broken down to the downside. If we zoom out and we take a look at what's happening with volume profile, we see that same low pocket of area when it comes down to how this market is basically moving. What that means is that over the course of the next few weeks, I think that a lot of people are going to be feasting on this area and watching this market be able to flush down and fall all the way down, possibly towards the 79 8,000 area for its overall movement. It could potentially happen like that. The reason being is because there's no other volume that's basically showing you that this market is going to end up finding some support. There's no support in this area right here. There's barely a little bit of support right here when it comes down to overall movement based off of the all-time highs. So this market, I think, is going to end up flushing, and when it flushes, it's going to flush very fast. Okay, so keep that in mind. I think that this summer is going to end up being a very good opportunity to be able to make a lot of money based off of this market basically falling, based off of what I'm looking at. Now, we take a look at this from a. Let me put my drawings back on here. Get my drawings back. There we go. Okay, so we take a look at this from a daily perspective. There's a subfield. There's a subfield with a daily D extension is expected to be at 10,544. So that's basically around the same area. That is the area where I'm trading to on this first initial move. Take a look at 2-hour high prices. Take a look at 15-minute high prices. If you can be able to catch any type of sales from this overall position, if it gives any type of up push, I think that's a fake out. Any type of up push that you're going to end up getting, whether if it's strong or weak, is to me, I think it's a fake out. Look at being able to sell high prices based off of 2-hour counter trend line breaks to be able to catch it, to be able to get all the way into this position. There's still about, from where we are now, there's still about another 900 points of overall movement. 900 points is basically $9,000 just being able to get in based off of that movement from there. For some people, that can be $90,000 depending on your account size. Based off of overall movement with low trading volume. So this is a high probability trade in my mind, as long as you can be able to catch it at the right spot. Currently right now we can go to the 2-hour and take a look at it from a field perspective. 2-hour, I guarantee, is in a buy zone. Yep, 2 hours in the buy zone. If we take a look at what's happening for this overall position, it's already done broken below the point of control. It's already below the low trading node of the point of control based off of this area. So if we get any high price, especially going into like the Sunday to Monday trade at 9:30 or anything else like that, any trade that pops up to the upside, I am looking at shorting it once it ends up getting to a high point. There's no reason in my mind to be able to look at buy trades because there's nothing from a fundamental standpoint that is basically going to scream out that it's ready to be able to buy. Aside from the daily being in a buy zone and people just like being able to buy on trades like this as well. So the market pushes up. Our first pocket area for us being able to get in will be at 11,930. If it breaks past that area, then it could move up to point of control at 12,400. If it does push up to this area, that will end up being past support turned into future resistance. And then after that, I'll look at being able to sell around that area. Okay, so I'm just waiting for a 2-hour high price to be able to get back in. I've already ended up making over $5,000 on Friday based off of this movement. So I'm just trying to wait and see if we can be able to get a little bit more of an up price. And then once it goes and gives me that up price, I may just stay in that trade until it falls down to the D extension for that movement. Typing a while, yes, if they end up making sense. The last one that I'm going to end up taking a look at, if we don't have any other ones, would be DAX. And then after that, we'll call it quits for today. Let's see. German 40. Okay, so So you take a look at this. When we take a look at German 40 is going to end up representing what's happening with the pound as well. Okay, so please keep that in mind for the people that are looking at pound trades or anything else like that. Want to make sure that you're aware of that. Remember, we're talking about when it comes down to pound United States, it could fall all the way down to parity, which is right now we're looking at all this other stuff is not necessarily out of the realm of it could be happening. So weekly, market broke a. Let's see, try to see if I can get as much information as I possibly can. Market broke high node area. Point control is at 12,300. We end up having all of this support that's basically around that area based off of the new highs. We do have a trend line that has not been broken, but if it does break, then that means that once again this market could potentially fall. Now, obviously, we see this. We see that we're falling into another high value area for a node. So this market may slow down just ever so slightly while it's actually going into this area. But it is an expectation that this market could continue to fall at least down to the point of control first before being able to make it pop up to the upside, which would correlate with the pound being weak for its overall movement. Now, based off of that, we take a look at what's happening with the Fibs. We can see that this market completed the D extension at 12,468, and then after that started to retrace. From this retracement, it started to push up to the upside, and then after that started to reject right here. Now, we talked about this before when it came down to the Euro United States dollar and pound United States dollar. So this is kind of interesting in being able to see it. We talked about how there was a double top based off of the pound United States dollar and based off of Euro United States dollar. Well, if you take a look at that, there goes your up move right there. It fell down, then popped right back up to the upside, and then after that fell down again, or starting to fall down again. So there goes your double top that you end up looking at from German 30, which matches up with pound United States dollar, matches up with pound yen. Can't make this stuff up. So that means to me that this market is at a point to where it could potentially keep on falling from that overall movement. We see it with candlestick formations as well. Now, see if I can get as much information as I possibly can. Let's see, put the drawings back over here. Okay. So I drew an up field based off of this movement. I'm gonna delete this up movement real quick because I just want to see something. This market went up to the 618. Once it ended up going up to the 618, basically what has happened is the market tried to be able to break past the 618 again, and then after that started to reject last week. Because of that, obviously the market is considered to be bearish. If the market does fall, it's going to fall down to 10,102 for the area to the downside. Now, does that kind of make a little bit of sense? Yes, but I think that it will kind of, if I'm looking at everything else between DAX between DAX, US 30 and everything else, this market could fall down towards this area, but I think it will struggle to get past 12,305, which is the point of control before ultimately, if it does break this area falling down, if it does break 12,145, then ultimately I think it will keep on falling down towards that area to the downside. So this one is probably going to take a little bit longer to be able to hit its D extension compared to DAX and US 30. But it still doesn't stop the thought process that this market is considered to be bearish. Now, with that being said, let's take a look at a sub fib and let's see, for the people that are looking at being able to scalp, where could you potentially go? From a sub fib perspective, actually, there's no sub fib. We're just looking at the same spot. I would be more serious about this market falling if this market breaks this counter trend line break right here. I'm going to get rid of that ABCD. There goes your inner trend line. Here goes your outer trend line that I just created. If this market breaks this overall level, if this market breaks this overall level, breaks out and then retests and then falls. You notice once again, a little bit of a high volume node, then after that, low volume node, low volume node, low volume node. That means that the market would continue to be able to flush to the downside based off of that information. We'll probably end up, let's see, if I can, yeah, it probably will end up going back down to at least the B without much hesitation. Then after that, we'll have a little bit of hesitation before ultimately trying to fall past 12,145. 12,145 will be the easy trade area because I think that if it does break past that area, then it's going to go to 10,000 very quickly for us being able to sell. This area right here, I would look for a breakout, look for a retest, and if you can be able to sell it at a high price, place your stop loss just above the overall swing high at 14,834, then I think you can be able to ride this one out for a very long time. Okay. So there we go. Went through about 10 different pairs. We got a few opportunities. We got a few ones that we have to wait on just a little bit. If you like what I end up doing, please make sure that you end up clicking on that like button and sharing it to other people. I do appreciate that. We finally ended up hitting over 450 subscribers. Been doing this for the last 3 months, and the movement has been pushing up a lot. I do appreciate everybody being able to tap in with me. But also want to be able to grow to 500. Want to be able to keep on going to 1,000. Hopefully, I can be able to get each and every one of y'all that is a part of our groups and members on TradingView to be able to be a group member of Carter Cow Academy. You're interested in being able to do that, all you have to do is go to cartercowcapital.com/start here, fill out the information, and then after that, what I end up doing is contacting you personally to be able to have you go through a free webinar to be able to show you what I do from a trading perspective each and every day to be able to bring in income. A little bit later on today, for my people that are that have received the link when it comes down to our passive income quick session that we're going to end up having. We're going to end up talking about how you can be able to use the bottom profile indicator to be able to show and find explosive gains. We're going to end up going through a mini session when it comes down to that as well. Like always, I deeply do appreciate everybody being able to pop in with me. Make sure that you end up planning your trade and trading your plan. Everyone, I see y'all on Wednesday. Take it easy. Or matter of fact, I'm sorry. I see y'all on Monday at 9 o'clock as we go through live trading. This is summertime. We're trading in the morning. I see y'all Monday morning at 9 o'clock. Everybody, take it easy.